capitalism is a very great economic system. It's a very nice economic system, but it also have its own shortcomings. So in this topic, I'll be discussing why people are actually struggling to pay up their bills, or why Nigeria or people in Nigeria are actually struggling to pay up their bills. Now, let's go into this topic now. You see, a lot of people are living in debt, and they are also missing payments. They are living in debt and they are also missing payments. When I say they are living in debt, they are living in debt in the sense that they actually borrow money and they have to pay the money they have actually borrowed back to the mortgage financial institutions or other financial institutions that have actually collected this money from. And apart from that, when I say they are missing payment, what I mean by that is that they are actually defaulting in their payment. They find it difficult to meet up the deadline, and when they do this, there's always an attending penalty for such a default. So you find out that in this economic situation, people are taking more debt that they can actually afford. You see, paying, taking debt is so easy in Nigeria. People love debt so much. They always want debt, but they never sit down and think, that debt I'm taking or that money I'm taking, how much am I going to pay as an interest at the end of the day? They don't care. Provided the money is going to be given to them, they will take the money. So people are taking more debt that they can actually afford at the end of the day. When I say afford, it means that at the end of the day, they find it very difficult to pay up that debt to the banks or the financial institutions they have actually taken this money from. Then, despite the high interest rate, people are still spending the money that they do not have. You discover that when most of these people actually collect this money, they are actually using the money to fund their lifestyle and to look big, to look rich, to look wealthy in the society, so that people can accord them that respect that they don't even deserve. Also, a lot of people are saving less money because of this situation. When you actually collect this money from these banks and you are paying interest on them, you discover that you find it very difficult to pay, to save some money and also to invest some money at the end of the day. And that's the situation most people are finding themselves today because of the high interest rate, which is about 24%, and coupled with the money that you are going to pay at the end of the day, you are going to find it difficult that you might not be able to save money and you might not also be able to invest your money. So the cost of living in Nigeria has really gone very, very high. People find it very difficult to save money, to invest their money. And also the cost of living has gone so high that it is now more than the income people are actually earning. So cost of living is higher than the income they earn or for the money that they collect as a form of salary at the end of the day, which is not good for the economy as well. So coupled with all these factors that I've stated so far now, you will discover that his care is not taking, the country will go into what we call economic recession. So cost of living is higher than the income people are actually earning. And because of that, they need to fund their lifestyle, they need to live up to expectation. And in most cases, they go back to the financial institutions. People are spending more than what they actually earn at the end of the day. So spending is not equal to income. Income is lesser than the amount spent, and this is doomed at the end of the day. So you are going to find yourself in what I call the cat race if care is not actually taken. Catch up with this economic trend called capitalism or free market economic system. There are some certain options which you can actually have at the end of the day. Number one, which I'm going to say three of them. Number one is either you spend less so that you can actually save more and invest more, or you spend more on your lifestyle, and when you do that, you save less and you actually invest less. Or number three, you spend more on your lifestyle. You understand? Irrespective of what is going to cost you. Now, in most cases, in Nigeria and other parts of the world, people are always opting for the third one, which is funding their lifestyle, irrespective of the amount of money it's going to cost them. And that is why you see that in most cases, most of them use their money to buy expensive cars, to go on vacations, to buy wristwatches, to buy shoes, to buy expensive shirts, and the rest of them. Because most of this money are actually gotten from credit facilities that are provided by banks. People don't go for option one, but they'll go for option three, which is what, spending more on lifestyle, irrespective of the amount of money it's going to cost them for them to fund their lifestyle. This phenomenon or this situation is not peculiar to Nigeria alone, but to other parts of the world. Our economic system is actually centered on what I call spending. Spending. This topic is very technical, so you need to follow it very well so that I can be able to understand it. You see, our economic system actually runs on what I call spending. Government spends money, individual spends money, private sector spends money, everybody spends money. Just like in America, everybody is spending money. So the more you spend money, the more you are stimulating the economy. So in a situation like that, they will say the economy is healthy, the economy is actually growing. But you ask yourself, what is that thing that is making the economy to grow, to make the economy to develop, to make the economy to be robust and to be buoyant? There's something behind it. In most cases, the economy is actually run on what I call a deficit, which is what I call borrowing. Do you understand now? So our economic system is actually run on what I call spending. Nigeria's GDP, based on the National Bureau of Statistics for 2025, is going to be at 3.4%, which is a very good one, driven by improving its security, driven by what I call oil production, higher oil production, and stronger consumer demand. Now, what you say, stronger consumer demands. Consumer demands will grow up when people are highly indebted, because now people are having access to credit facilities. So the more they have access to credit facilities, the more they will buy more goods. And when they are buying goods in society, the economy is what is going to be stimulated, or the economy is going to be experiencing what we call a robust economy. So in a situation like that, you say the economy is developing, the economy is robust, the economy is healthy, the economy is buoyant. But in most cases, the economy is not buoyant, because in most cases, government runs the economy on deficit by borrowing money, individual borrowing money, government borrowing money, private sector borrowing money, everybody is actually borrowing money. It will get to a point that if care is not taken, it's going to shock up, it's going to get to what I call the bubble burst. The bubble burst. And when the bubble burst happens, what happens? In that situation, the economy might actually experience what we call a recession. That's when you say the economy is actually experiencing recession. What it means there is that government is actually borrowing, individual is actually borrowing, the private sector is actually borrowing, and now it has gotten to a bubble point that the individual household might not be able to borrow that money again, that he has to pay up that loan that's actually owing. And when he's paying up that loan that is actually owing, the economy is going to experience what I call a slowdown. And that's what we call economic slowdown. When you hear the word economic slowdown, it means that the individual household are not spending more on consumable goods and other things like that, but rather they are paying more on debt. And when they are paying more on debt, the economy is not going to be stimulated. People are not going to buy more in the economy. And when they are not buying more in the economy is going to slow down. So when you hear the word slow down economy, it means that the economy is experiencing what we call a decline, because household consumption is now reduced to the various minimum. The same principle applies to Nigeria and other parts of the world, including the United States of America. So the biggest spender of money in every economic system is actually the government. The government is actually the biggest spender of money in the economic system. Why do I say that? The economic system, in a capitalist economic system, is run by the forces of demand and supply, which is actually controlled and maintained by the government at the end of the day. So when the forces of demand is high, the force of demand is high, it's good for the economy. So in the capitalist economy, the force of demand and supply will actually act as a barometer to the growth of the economy, And I'm talking from an economic perspective now. So the force of demand and supply will actually have a very positive or negative impact on the economy, depending whether the force of demand and supply is actually on the positive side or a negative side, which actually determine what we call market forces. I'm not going to go into that details, market force, because of our time. Do you get it now? So government is the highest spender in our economic system. So in most cases, government spend the money that they don't even have, also just like an individual that will spend money that they don't have when they go to banks to borrow money from credit, mortgage financial institutions to borrow money in form of a loan. Government too borrows money in form of a loan. So in most cases, government spend the money they don't have, and when they are spending the money that they don't have, they are borrowing the money from somewhere. And when they are borrowing the money from somewhere and they are spending that money, They are using that money to stimulate the economy, to make the economy to be buoyant, to be experience the economy boom and the rest of them. So the situation like that, you see that the country is actually experiencing economy boom. The economy is robust, is healthy, and the rest of them. But at the end of the day, government will also pay a fine for that. And that is why after so many years, in this situation, you hear economic recession. It has happened, so many times in the world. I could remember in 2000, year 2000, there's economic recession. In year 2008, there was economic recession. In year 2020, there was also economic recession. So it has always happened every 10 years, 8 years. If you have been following, economic analysis very well all over the world. Based on this analysis, we are running a credit-based economy where banks and the government and corporations will always encourage people to borrow money in form of different types of debt. It can be mortgage debt, it can be business debt, it can be any form of debt, provided it's actually a debt. Debt is good. When government borrows money, it's actually good, but it can also be a problem. See, government always borrow money. Even in the United States of America, they are borrowing money. China borrows money. Nigeria is also borrowing money. It is good because that money is actually used to stimulate the economy. But at a point in time, that money can be a bad debt or it can become a problem. You see, economic growth is actually good, but unfortunately, when it is run on debt, including through the government and other part of the economic system, it's not also always a good one. Do you get it? It's not always a good one. So economic growth is good, but unfortunately, it runs on debt, which includes government debt and private sector debt or any form of debt, including you and I, when we are running on the debt. You see, too much debt can be a problem. It can be a problem because of the way the debt actually works. Don't forget that when you borrow money from someone, most especially in the form of this mortgage financial institution, you're going to pay interest. So government too also pays interest, and it will get to a point also that when government is borrowing this money, it will get to a point that the government credit facilities can also dry up. The access to credit facilities can also dry up in the sense that government will have to pay up its debt, and when they are paying up this debt, it means that the economy is going to slow down. Even when individuals are also paying up their debt, it means that they are not going to spend more, but rather they are going to use that money to be paying more debt. So when they are doing this, the economy is going to experience what we call a slowdown. And this is the term that is also used in the economic system that they will say the economy is actually experiencing what we call a economic recession. Economic recession. So Nigeria is experiencing economic recession now. Too much debt, just like I said, can be a problem because of the way debt actually works. So you may not, qualify for more credit when your credit facilities are used up. The same way it applies to government, they may not qualify for more credit, most especially when their credit facilities are also used up. So this means that you have to pay up your debt. So when you say that your credit facilities have been used up, it means you have to pay up your debt. So we need to continue to stimulate the economy by allowing people to have access to credit facilities. But when it is too much, then it is not good for the economy. So you can keep borrowing money, it doesn't matter. But don't forget that when you use up all your credit facilities, it is going to be a problem. Because at that point in time, you may need to pay up all your debt. And when you are paying up all your debt, you might not be able to save money, you might not be able to invest your money. How does debt becomes a problem? Debt can become a problem when it leads to what we call economic recession. Economic recession. This is where I'm actually going to. Now, Nigeria is experiencing economic recession, and most of us don't understand why Nigeria is experiencing economic recession. Nigeria is experiencing economic recession because government is borrowing money, and that money has gone very, very high. And unfortunately, that money that should have been used by the government to provide infrastructural facilities, to build more roads, to provide access to good roads, to provide more healthcare facilities, to provide electricity supply, to provide healthcare, to provide security, to provide employment to society, and some other things like that. When all these things are not there, but rather the government is funding or servicing its debt, we are going to discover that the economy is going to experience what we call a slowdown at this particular point in time. And that is the period we call economic recession. So too much debt, too much borrowing can lead to economic recession when government is paying up all its debt. At the end of the day, the government might not be able to fulfill its governmental role to the people or its responsibility or obligations to the citizens at the end of the day. Now, I've said that the economic recession has been experienced in the world in 2000, in 2000, 2008, and the year 2020, 2020, 2000, 2008, and the year 2020. You can vividly remember what happened in 2020 during the time of COVID-19. What happened? The world went into what we call economic recession. So when you run the country on debt, it will stimulate the economy, but at the end of the day, it will create what we call economic recession. So when government is pumping more money, spending more on the economy, it will create what we call a recession at the end of the day. But on the other hand, government will tell you that they are trying to stimulate the economy, they are trying to grow the economy, they are trying to develop the economy. But at the end of the day, when such a thing happens, it might lead to a recession because government will be using other people's money that they have taken in form of a loan to fund the economy, to stimulate the economy, and they have to pay back. And individual household will also be affected. When you are collecting the money from the bank, you are collecting the money, you are collecting the loan, and the rest of them, it will get to a time that you are going to use up your credit facilities, and you might not be able to collect more loans. At that point in time, the bank will tell you to pay up their money, and when you are paying this money, you might not be able to afford or go for all those things that you have actually been buying before. And what happens in that economy? It's like a circular flow of income. What will happen at the end of the day? That the economy is going to slow down at the end of the day. When this happens, you say the country is actually experiencing what we call an economic recession. So the economy will slow down when people start paying their debt, when government start paying their debt, when people start paying their debt, when the private sector start paying their debt, the economy is going to slow down, which will lead to what we call the economic recession. You see, the most funniest thing is that nobody knows when the economic recession will actually, come up, when the bubble will burst, or when it will get to a breaking point. Nobody actually knows. Nigeria is actually, experiencing economic recession now. We did not prepare for it, but I've stated those factors now. When government is borrowing money, when individual households is actually borrowing money from banks and the rest of them, and they are paying back, and the people's consumer demand is going to be reduced to the barest minimum. When that happens, you are going to experience what we call economic recession. You see, in America, people are actually spending money because government is stimulating the economy. Government is pumping money to the economy. Government is putting money into the economy, borrowing money to stimulate the economy, and everybody is buying. And when they are buying like that, the economy is going to be stimulated. But at a point in time, it's going to lead to what we call a bubble burst. But irrespective of this, there's a good news for you. Irrespective of this, what I've just explained so far, there's actually a good news for you. And what's that good news? You can actually, prosper in this economic recession. And that's why I said the best time to make money is economic recession, when you have financial education. And what can you do that can actually make it to make money in this economic recession is that, number one, you need to live below your means. That is, you need to cut down on your expenses. You need to cut down your, buying, going there and going for loans. You need to cut down your loans. You need to cut down your expenses, how you spend your money. You need to cut down on them. Then number two, you need to have what we call a cash reserve, because whenever there is economic recession, opportunities will always arise. So you need to have what we call a cash reserve. Then number three is that you need to set cash aside for investment opportunities, because right now, the value of stock in the stock market and some other investment opportunities or investment options, the value has actually dropped. And because the value has actually dropped, a lot of people are going to do what I call panic selling. They'll start selling their stocks at a discounted rate, maybe 20% or 30% or 50%, or even 75% discounted rate. This is actually the time you can actually, look into that area and buy those stocks, because at the end of the day, every recession will always bounce back. It will always bounce back. In 2008, it bounced back. In 2000, it bounced back. In 2020, is actually bouncing back. Most of the countries in the world now, they have left the level of recession, and the economy is actually improving now again, because government is actually stimulating the economy again. Then after so many years again, the bubble will burst and there will be economic recession. So we have come to live with the economic recession. No matter what you say, government will tell you today that we're going to make the economy is going to be fine, we're not going to be experiencing economic recession. Is a bloody lie, because every government is always borrowing money. So economic recession will always happen. at an interval, maybe 8 years, 10 years. So you have to prepare for it. And that is why I love this man so much, the man called Warren Buffett. He knows that every 10 years there will always be economic recession. Every 8 years there will always be economic recession. The bubble will always burst. And that is when he always waits at the corner, waiting for the right opportunity to strike and buy those stocks. And that's why Warren Buffett today is earning over $700 million in Coca-Cola as an investor, not as a owner, but an investor, a co-owner in Coca-Cola. So what are you doing? You can make money too in this economic recession. And that's why this video is there for you to open your eyes, to know that every country in the world will experience economic recession, no matter how vibrant, no matter intelligent, no matter how active, no matter how proactive your government is. Every country in the world will experience an economic recession. And when it comes, it's an opportunity for you to grab your own pie from that economic crisis, because economic recession will always create billionaires and millionaires. Are you one of them? So you see? So you must wait for the right opportunity for the economic recession to come up, like what we're experiencing now. Like most people that are investing in Nigeria now, they are making more money in Nigeria, because economic recession will translate into what we call inflation. And when there's a high inflation, that means that if you're an actual investor, you are going to be earning what we call compound interest. Compound interest. Compound interest is indisputable. It's indisputable. If you are investing in money market funds, you are going to be earning about 23.5% compound interest per annum on the total amount of money you have actually invested at the end of the day. So that means that if you have invested 1 million in a year, we are going to collect 1,230,000 as what? As your interest. So your interest is going to be 230,000 for 1 million. Is that not money? So open your eyes today and invest wisely. So economic crisis create what we call financial opportunities. So the financial opportunities are always there if you can see clearly based on your financial education. So you must invest in a period of financial crisis, because it will make your money to compound. It will make your money to compound. Whether 8% or 10% or 15% or 20% or 20%, like what money market fund is providing in Nigeria now, your money will always compound. So you need financial education. So in most cases, economic crisis is not a cause. It's actually a period to make money for yourself and become a millionaire. So I hope you have actually gained something from this video. If you have gained something, please subscribe now and share my video, and like and also comment on this video on how to serve you better. Till I see you next time, thank you so much and God bless you.